Good afternoon or good morning, wherever you are around the globe, and welcome to our webinar and our launch webinar in terms of the Impact Calculator that has been created by the Impact Working Group, very much led by one of our co-chairs, Roland Menger, which is a new and simple way to help use the impact metrics. So we're going to be running through a demo of the tool, as well as a bit of a recap and background on the metrics as well during this webinar. So thank you so much for joining us. Let me just move to the next slide. My name is Susie Wilder. I'm the research lead here at Gogler. And I'm going to be joined in terms of this presentation by Nabila Khan, who's the investment manager for the Impact Accelerator at CDC Group, who is one of the co-chairs of the Gogler Impact Working Group, as well as Roland Menger, who is a senior financial analyst at Zola Electric, who's our other co-chair of the Impact Working Group here at Gogler. So I'm going to run you through a little bit about some high-level impact estimates and give you a sense of some of the numbers that come out of these impact metrics and some of the numbers that go into them. Then Nabila will run you through why these metrics are important and how they can help you. I'll briefly mention how some of them are formulated before the main, obviously, sort of part of this call is the demo of the impact metrics calculator that Roland will run through. And then we'll just wrap up with a little bit of info on some other resources that might be of interest to anyone on the call. But before we dig into that, we're hoping that we might be able to engage you guys with a little bit of info in terms of the organizations you work for, how much you might know on the metrics already, whether any of you have seen this calculator already. It's only been out a week or so, so don't feel at all bad if you haven't. But yeah, we're hoping we might be able to launch just a quick couple of polls, which will just take a couple of minutes just to get a sense of who's on the call to make sure that we address the presentation appropriately to you. Chef, who is in the office, I'm hoping now you can perhaps launch the very first poll if you are able to. So this poll is which category best fits your organization. If you're able to add into here, that's fantastic. And I'll just give a couple more seconds to get a few more people coming in. It looks like mostly we've got quite a lot of others, so we'll have to try and to figure out what that category, cut that down a little bit later on. But it looks like we've got a good strong chunk of off-grid solar companies and other commercial businesses, as well as investors. So thank you very much for that. Perhaps we can go then to the second poll, which is really just to get an idea of how familiar you are already with the impact metrics that we put out here at Gogler to standardize impact estimates for the off-grid solar sector. So yeah, just to get a sense of whether you're very au fait with these or whether we've got some people who are a bit newer to the impact metrics. And just take a little second to give people a chance to vote. So we've got here around 40% of the group know that Gogler develops them, but perhaps don't have much more background on these. Around 20% who are familiar but don't yet do anything with them. So hopefully we can help you to better use these metrics and explain them to you. And then a few people who are relatively familiar or indeed very familiar with the metrics, and then a handful who hadn't really heard of these until perhaps they might have seen the email around the webinar. So it's great to have those who are new to the metrics on the line. We're really excited to be able to show these to you and hope we can explain how they can be used, and also be great to hear from you in terms of how useful they are for you. And also welcome to those who are a bit more familiar with the metrics. We're glad that you're also very keen to learn more about this calculator tool. So our final poll is around the calculator, just to see if anyone's already been using this calculator and has a great sense of it, or whether this is very much the first time that you'll be seeing it. So again, I'll just pause for a few seconds to let you answer the poll. And it looks like we're nearly getting there. So it looks like the majority of people are interested in it, but they've heard of it, but they don't know much about it. A few that have never heard of this at all. So this would have been the first, I guess the first insight into it would have been getting that email around the webinar. Great that 30% nearly have played around with it, and I'm fantastic for the 1 or 2 people who are already using this in reporting already. That's our ultimate aim, is to make this tool as useful as possible for you to use within your businesses. With that, thank you so much for that additional information. I'm going to make myself back the presenter again. It seems like obviously there's some people who have that knowledge of the tool, perhaps there's 1 or 2 that are really already using this. That's great, but as well as a lot of people whom this is very, very new. We're going to be explaining a little bit of background on the metrics, as I said, and then into the tool. But if you have questions at any time, please do add them into the chat box. You'll be able to see that in the sort of the pane of things that you have popping up on your screen. We're going to have some time at the end to answer questions, and we'll also be sharing at the end as well an email address if you haven't got a question, but then once you start using the tool, one pops up into your mind. Don't worry, there will be other chances to connect with us and ask more questions or provide more feedback. But thank you so much for taking part in those polls. That's really helpful to get a sense of who's on the line, so we can make sure that this webinar is tailored accordingly. So the first thing that I'm going to run through is a couple of high-level impact estimates, and this is to give you a sense of the outputs that come through once you're using these impact estimates. And these are the impact estimates that we put out every 6 months through Goggler, and these are the most recent estimates that came out just last month. And what you'll see here is some very high-level big numbers that come out of all of the data that's collected from Goggler members and IFC affiliates who report their sales and impact data into us. So what's fantastic to see is that over 100 million people, we estimate, are currently living in a household with improved energy access because of off-grid solar. And you'll see here that nearly 60 million people are accessing tier 1 of energy access, where they get an additional at least 4 hours of light a day, as well as in here in this tier 1 also phone charging and other capacities. I haven't noted it on this slide, but we now have almost 5 million people also accessing tier 2, which is where we see now a lot of customers purchasing televisions, fans, and some much larger appliances. And so that next level of energy access is also being very much supported by the off-grid solar sector, which is really exciting to see. Another of the impact metrics talks around the reduction of CO2e, which is CO2, but also its equivalent, and that's important for our sector because that relates to the black carbon that's emitted by kerosene lanterns. And considering the very small size of the products that the sector sells compared to sort of massive wind farms or huge solar parks, it really is quite an amazing impact in terms of the CO2e that's averted when kerosene lanterns are switched for off-grid solar, with nearly 60 million metric tons of CO2e averted since 2010. Over on the right side of the screen, you'll see some of these other impact estimates relate to the development benefits for households. We find that 2.7 million people are using their system within small enterprise or to create income. We found that these kinds of activities are where people are opening shops for longer in the evening because they now have lighting, they're perhaps charging phones for a fee, or if there's a television with their system, they're able to open up perhaps a small video hall or something along those lines. We're also seeing that this kind of activity is leading to, or has led to, around 4 billion being created in additional income for those households. And on the flip side, we're also seeing a huge amount of savings when people are switching from traditional energy sources to off-grid solar. And the savings are really largely seen with the smaller products, the lanterns and the multi-light kits, which are of course cheaper for those customers to purchase, but still a really amazing number. And all of these impact estimates are coming out from the use of the metrics when which we'll obviously be talking about a bit further. Just a quick note to mention that the estimates are related to sales of Goggler members and IFC affiliates only, which is only a proportion of the whole off-grid sector. So as big and exciting as these numbers are, they're actually not the full picture, and actually the sector in its totality is creating even more impact than this. So that's what comes out of the impact metrics, at least when we aggregate it up, it's the Gogler scale. But what goes into them? Well, lots and lots of different types of research, but one I'll just pull out to give you a sense of some of the data points that go into it. Is data that's come out of the Empowering Opportunity research that took place and was released last year, working with 7 off-grid solar companies across 5 countries and supported by the UK Department for International Development, where we found that a third of owners already increased their income per month because they had off-grid solar system, as I mentioned, you know, opening businesses for longer, etc. Sometimes people actually moving their day around so that they could do household chores in the evening and have more time for paid employment in the day. And on average, those households were able to create around $35 more per month. A quarter of households using their systems in business directly. 7% of households where a member is able to get a new job that's really related to that time shifting of people having more time in the day because the day has been elongated, although perhaps also where people have more access to mobile phone technology or don't have to travel to get their energy supply, so have more time from that as well. And a really fantastic 95% of households who are reporting that their quality of life has improved. So again, just to give you a sense of sort of some of the impact data that's going into the metrics that then we create, then we use to create those impact estimates. But before we get into the sort of the actual impact metrics and the formulas, I'm just going to hand over to Nabila, who's going to take you through a little bit of the background into why these metrics are important and importantly, how they can be helpful to you.
Great, thank you, Susie. Hello, everyone. So I think from an impact perspective, when we're thinking about quantifiable metrics, they do tend to have quite a bit of appeal. Because they're seen as easy metrics to use and to report on. So whether it's one that Susie touched upon earlier, which was the CO2 equivalent of emissions avoided, or it's the number of people with access to energy. Both of these metrics, for instance, tend to have quite a bit of traction within the development impact space, within the off-grid solar space. So there's quite an attraction to use things that are usable and quantifiable. One of the things is that with the current methods that we have, it's also quite difficult to understand downstream effects as a result of energy access. So these are some of the ones that we'll touch upon later on in this presentation. But basically, overall, what this ends up doing is that what we've noticed in the industry, that there are different standards for different reports or by different investors. Now that creates quite a lot of complication and confusion because there could be differences in calculation methodology for what is in fact the same metric. You have different metrics being used for the same topic, or there are different topics being focused on. So for instance, whether somebody uses CO2 equivalent versus greenhouse gas emissions. And thirdly, there's often a lot of one-off requests just before kind of financial close or for a press release. I think with all of these things, what it does is it yields a comparison of apples and oranges. And what that does as an industry and for individual companies is actually quite a negative effect because there's a huge amount of work being created. There's some confusion. We don't know if we're all being able to compare apples to apples rather than apples to oranges. Next slide, please, Susie. So one of the solutions, which we actually have been, as Gogler Impact Working Group, have been working on, is that having a standardized set of impact metrics for the off-grid solar energy has many benefits. For companies, it enables them to streamline reporting and attract investors. For the investors, it enables them to understand and compare the impact of their investments with a level of confidence. And also for policymakers, it enables them to understand the impact of off-grid sector on households and businesses, which they can then use for any future policy development that they undertake. Now for, next slide, please. So in response to this need, last year, this particular report for the standardized impact metrics was launched, which I suspect many on the call would have come across. It covers 4 different system sizes, as well as pay-go and cash business models, which is really quite the beauty and strength of it. The areas that it covers include energy access, economic activity, income generation. For those who are interested from a climate perspective, there is calculations on kerosene replacement as well as CO2 equivalent reduction. The impact metrics cover light availability and quality, the energy spending at the customer level, and the effects, and hopefully the positive effects that are taking place there, as well as on financial inclusion through some of our PAYGO models as well. So who at the minute uses the impact metrics? So as I mentioned, these were launched last year, and there's several companies and investors who are currently using the metrics to estimate the impact of their products, to estimate the impact of their investments, or even market supporting activities. And for our GOGLA members in particular, some of you may have received this already, but there are individual data on estimated impact that you can generate as well. For GOGLA as an entity, they use the metrics to calculate the impact of GOGLA members and IFC associate companies, which are actually released through the Off-Grid Solar Global Sales and Impact Reports twice a year. For sector partners and decision makers, so for those who are familiar with the GIN network, or also known as the Global Impact Investing Network, they've actually taken on these metrics and harmonized it within their IRIS catalog. So several investors who might be on the line would be familiar with the IRIS metrics. So now these metrics that are within this report are actually part of that catalog itself. So there is a level of harmonization that's taking place, which is really quite positive to see. And the metrics and impact estimates are also used by our sector partners, including the IFC, ARENA, and the SE for all. So I hope in a sense, I mean, what I've tried to do is give an example, an overview of how they're being used. And what I'd like to leave you is, this is from one of my colleagues, Jeff Manley, who's the head of the decentralized energy portfolio, and he leads our off-grid energy access and resource efficiency investments. So from his perspective, because this was something quite new for him as well, what he found with the impact metrics was that they added a lot of value for CDC as an investor. We have used these metrics to articulate credibly the downstream impact of our off-grid solar investments for our stakeholders. And then we can actually aggregate them, the impact indicators across our portfolio to give a fuller picture of what our investments are achieving. So the metrics are also proving useful in standardizing reporting across investors, and we've seen several cases where companies have to prepare multiple impact reports. So I think overall we recognize the inordinate reporting burden it has on companies, and this is a way to avoid that. So over to you, Susie.
Thanks so much, Nabila, and apologies for my computer getting a bit over keen with the touchpad on moving some of those slides along. Fantastic. Yeah, just to give you a sense there from Nabila of how those metrics are being used by CDC, but as well as how they're useful for other members of the sector, companies, international stakeholders, renewable energy associations, etc. So what I'm going to before we get into that calculator tool demo from Roland is to just give you a very quick overview of some of the metrics and what we're talking about here. So on the screen, what you can see is some of the formulas that have been created around some of those metric areas that Nabila mentioned. So the first ones on the screen are the metrics around energy access, the next few are on economic activity. And as she mentioned, there's lots of other categories of metrics as well. And the metric formulas might look a bit scary, but that's why there's a calculator now here to help you. But in essence, they're quite simple in that they just need to have a few numbers plugged in, which is where you see there's a bit of the formula in blue, and then that gets married with some default and standard variables, which is the variables that you'll see in green in the formula, and then you can use that to then calculate an estimated impact around one of these impact areas. So some of the things that go in the blue segments of the formula are sales figures, product characteristics. For example, warranty length is quite important to us because we use that, or we use 1.5 times warranty as a proxy for the lifespan of a product, because some of our products won't last forever because of perhaps the battery life, and we therefore use that 1.5 times warranty as a very conservative way of highlighting how long those products will last. Other examples of variables that you'll put in yourselves into these metrics would be around that cost to the consumer, perhaps for that savings metric to understand whether that consumer is going to make savings from the use of an off-grid solar system instead of what they were using beforehand. And then these standard variables, which are the bits you'll see in the formula in green, have been created from a wide array of research. So I mentioned at the beginning of the conversation, the webinar, that the Powering Opportunity research had revealed a huge amount of data around the economic activity that was being unlocked by off-grid solar systems, and with thousands of customer interviews to get that data. But also lots of other sector partners and peers have contributed data that's gone into these metrics as well. Acumen, which is now, they've now had their research arm spun out into an organization called 60 Decibels, has been hugely supportive in this regard, again providing thousands of data points that have gone into these metrics, as well as SolarAid and Off-Grid Solar Charity, Finca, another one of our impact working group members, some of the international stakeholders like the IFC, ESMAP and others from their multi-tracking framework survey. So there's thousands of data points and various bits of research that have gone into these standard variables, which is what you'll see there in the blue. And to dig into just one of these just to give you an example of how these formulas work underneath, this is a formula around a number of people generating additional income because they have an off-grid solar system. And you'll see here, if we look at the formula in the light blue, SL stands for sales within their lifetime. So again, basically sales within that 1.5 times warranty. That then would get times by a discount rate for loss. Because we only want to obviously estimate impact for products that are going to be running for their lifetime. So there's a rate that is put in there for cash sales, which is slightly different from pay-go. For cash sales, we've come up with a 3% number. There isn't much research on that, so that was from expert review through the impact working group over a number of years with companies and academics focused on off-grid solar. And then for pay-go, that would be a discount rate for loss that would include things like the default rate. You can see here that that's in blue because companies using these metrics would actually be able to put in their more specific sort of default rate or rate at which some of their systems are not perhaps not in use, and therefore being creating that impact for customers. So we leave that discount rate obviously within the formula for a company to put in as accurately as possible themselves. And that then gets times by the number of people who we estimate are creating additional income from off-grid solar products. And here is where you can see, as Nabila described, that we have different system sizes for some of these metrics. We estimate that around, from the research that we've seen, around 10% of customers of solar lanterns are generating additional income. And then for the multi-light kits and solar home systems, both small and large, we're seeing slightly larger percentages of customers who are generating income from those systems. So that's just a background example of one of the formulas, so that when Roland talks you through the tool, you'll see some of the details that go into these. But before we get to that tool, a few things just to remember. These metrics are limited by best available data. Although we have thousands of data points now on this sector, it is still relatively new, so there is always new research coming in, and we try to update these metrics, not all the time, so because we want to have some consistency, but every 18 months to 2 years with the new and best available data. We always refer to them as estimates, so that because we recognize that this is this is a moving target in terms of the research data that's coming through, but using that best available data, these are the estimates that we get. As we mentioned before, there are certain variables and metrics that relate to different system sizes or business models, so please check you're always putting in the right information and using the right ones. Please don't use these metrics if you are talking about systems that are sold to communities in the developed world. This is obviously, we're looking at impact for off-grid households, so we don't want all sales, only those sales that are related to off-grid underserved communities. We advise that these metrics are really only used with high quality solar products, because the research that has been done has really been done on high quality products. Some companies might have more specific data for their own customer base. This is a foundation, not a ceiling. We look at this as a framework. If you are a company that has an impact variable that is slightly different. So for example, on that income generation, you know that of your solar lantern customers from your own robust research that actually 15% of customers are creating income, or 5%, then please do feel free to change that variable. But please only change that if you really have good, strong, robust data to go in there. And please, you know, we've created that framework with discount rates and other things in it to try and create that consistency. So yeah, so please be very careful if you do change, but recognize this as a foundation, not a ceiling. And then obviously there may be some instances where it's quite clear that your products will not create the impacts in the estimates. Of course, we're looking at these metrics and trying to create them for the whole sector. But one good example of that is where we see kerosene replacement and then the CO2e reduction metrics. There are some countries where there isn't much usage of kerosene and customers are primarily replacing the use of torches or candles. So if you know that you're operating in a country where there's very little use of kerosene, or you're investing in a company that's working in a company with very little use of kerosene, please use these metrics, obviously advisedly. It wouldn't be appropriate to then use the kerosene replacement metric or the CO2e reduction metric, because that is really driven by the replacement of kerosene and the reduction of carbon and black carbon. So basically, it's a common sense approach. Please take a common sense approach to these metrics. But with that hopefully helpful background, without further ado, I'm going to hand over to Roland so that he can actually demo the tool that we've been discussing. And I'm going to try to change presenter over to Roland so that he can do that.
Thanks, Susie. So we're looking at the tool as you can download it from the website. The link is in the presentation, which will be shared later on, but otherwise it's very easy to find. You download it, it's an Excel file, and you come at this landing page. We created the tool in such a way that it should be fairly efficient and easy to use. Still, this is a demo, so I'll slowly go through the different steps. The goal in the end is to get this tool online, of course. So with that in the back of our minds, we created is as much interactive as possible already. You start with your landing page where everything Susie just mentioned, all the caveats are mentioned here again. There's some background on what you should report on and in what unit, etc. Whenever you have read this, you can start using the tool. That brings you to this page, and this is actually the only page with inputs. So you start with entering all the light blue cells, which is the company name. So in this case, it's Gogla-Test. You select with a drop down, so it's either cash or paygo. So if it's cash, you already see that there's a shift in what you need to input. Or paygo, it shifts the other way around. And it's just top down going through this list. You have a reporting period on which you report. So over here, you can, it's quite important to set this right. So you can say I'm reporting for a quarter or for all year, and then in which year. And this is also what the output is being given about. So if you're, for example, right now, we'll do an example from last quarter, so Q2 2019, it's July now, so we need to report on it. So how many jobs do we have? Let's say 150 FTEs. 75 of those are female, and we've got 500 commission-based agents, service agents, sales agents. These are for further fine-tuning as well. We just put these in to get some governance input and output. We are working as a working group on getting more detail and more research on this, as well as more input on, for example, indirect jobs and induced jobs. So if you have any research or thoughts on this, on how we can fine-tune this, don't hesitate to share it with the working group. In the next version of this tool, hopefully we will have this updated to a more elaborate section where with more input and more output, obviously. And then you come to your the part where you actually just fill in your company details. So for the first time, you need to put in what kind of system you are selling. So I set Q2 2019 here. Then I'm going to put in the units sold only in Q2 2019. This will change automatically. If you change this to Q1, you can see this changes to Q1 as well. But again, it's important to know what you're reporting on, because in the end, it always is garbage in, garbage out. So let's say we did 1,000 units. We give a 3-year warranty on this one. It costs you $100 US. The gray one you don't need to fill in. As I told you before, this is the cash one. This is the Pago one. Payment rate, not so good, 80%. It's a cheap system with 250 lumens at mid setting, 3 watt panel, and a 10 watt hour battery. So in the end, you fill in more systems here. So system 2, let's say we did 2,000 of those. Also a 3-year warranty. This one's 175 euros. Just make something up here, 90% payment rate, larger system, twice the size of the previous one, etc., etc. I'll just do 4 systems, so we have all different categories. I'll come back to that in a moment. Let's say 400, 90%, 700 lumens, 20 watt panel, and 80 watt hour battery. So it's important that all the fields you are putting in for your for any type of system are filled. So I cannot not report on an average payment rate or total cost of ownership, because then the metrics will not work. So until the gray one, this is all being filled automatically. So only the orange and the red ones you need to file. Last one, let's say more expensive system, larger, better payment rate, 100 watt panel and 250 watt hours battery. So now you can see automatically it files each of these products in a category, and there are 4 categories. It's small, relatively small, medium, and large. So whenever you change something, so if I make this a 10 watt, then automatically it goes to the other bucket. And these product categories are there because those are basically the basis, the foundation on which these metrics are formed. So for a 3 watt system, you have a different multiplier than for a 50 watt system. That's why this happens here. And everything else that happens here is automatically, you don't need to look at it. You just file your system. And whenever you've done this for once, then for the next quarter, you actually only need to redo your units sold for, so let's say now we're in quarter 3. Then you just change your units sold and your payment rate, because the other settings will remain the same. So this makes it hopefully very easy to work with on a continuous basis. So you filed all your systems, you filed all your sales, you are reporting for the right period. And then you ask go to dashboard results, and this is where you end. So you can print this or put it in a sheet, PowerPoint, which automatically gives you all the details. So the company name, for which reporting period are we reporting on, and what's the type of business. And then it gives you all the metrics. So again, as Susie said before, I think it's important to note there that first of all, it really depends on what reporting period you're in. So I'm just filing my sales for Q2 2019. It means that these are the amount of kerosene blenders replaced and CO2 emissions reduced over the lifetime of these products sold. So if I sold 1,000 products in Q2, it means that over the lifetime of these 1,000 products, you have saved 9,300 metric tons CO2 equivalent. This makes it also very easy to add on. So if you put your Q3 reporting, you can really just sum Q2 plus Q3 is Q4 is the total of Q2 and Q3. So additional light hours used, change of light quality, energy spending, savings. So this is an important one as well, because right now, as you saw in Susie's slide as well, the savings are the largest for the smaller type of systems, which is logical as well. So if you are a company with a lot of larger systems that are more expensive, so let's say I'm only selling this expensive one, so I'm just copying this across, then probably you will see that your savings will become negative. So it will show you a 0 here. So you're not saving it. Your customer is not saving any money anymore. So this is also a check. I think this makes total sense, that for a more expensive system, you have less savings. Going back, your clean power capacity install, which is also really nice, because like, for example, for Zola, we've never known exactly how much megawatt we install. So now with this tool, it was actually very easy. We just file in all units ever sold and your product warranty for all these types of units, and you automatically get your cumulatively installed power capacity. So use this tool as well internally or for on your website to report your impact metrics. We've got energy access here. Note in this version that the number of people with access to tier 1 and tier 2 is not defined yet, as we are still finalizing on the right metric to use there, the right multiplier to use there. Economic activity, income generation. In the end, these are all the metrics that are in the research as well. So whenever you are in doubt of what a metric means, what does it mean? The number of adults currently benefiting from clean energy financing. How is that defined? How is that calculated? You can always go back to the impact metric research, which you can download from the website. I think it's right below where you download the tool. And there's the research, so the whole background, and there's an executive summary with just the formulas. So it's always very easy to trace back how you came to this number, because everything that's calculated here is based on that research. So I think for questions, we can do it later on. Also, more specific questions on how to use the tool, or something went too quick or too not clear enough, then you can send me an email, or later on in the webinar we have room for questions. So I'm now handing it back to Susie.
Indeed, thank you so much, Roland. That was fantastic. And absolutely, as Roland said, if you've got some questions after that demo, please just pop those into chat. A couple of things just to note is that in terms of total cost of ownership, just to sort of in terms of the terminology there, what we're looking for with the pay-go is how much that product is going to cost to the customer, so that the total cost for them to purchase that over a time period. For the cash sales, we'd be looking at retail price to that customer. And then average payment rate is the terminology, obviously, that we've got in this calculator tool, where it's sort of 90%, 85%, 95%, or whatever that might be. And that's sort of the other way around of thinking about default for the pay-go. So where we're, instead of saying it's an X percent of customers are in default, we're looking at it more proactively of how many of the percentage of systems are the average, averagely repaid. So yeah, just to mention a couple of things in terms of the terminology there, just to clarify for anyone that was wondering. But indeed, this calculator tool makes it very simple, as Roland just showcased, to pop in your impact data, to pop in your sales numbers and warranty numbers and average repayment rate and cost of system. And then you get all of those impact estimates that are immediately using those formulas in the back end of the Excel to ping out the outputs at the end. So hopefully that's a really nice and simple way of being able to use this tool to create those impact estimates, rather than plugging in each formula yourself each time. I'm just going to try to get to the next slide if it wants to. If it doesn't, bear with me 2 seconds. There we go. So just quickly, as Roland mentioned, the tool is on the Gogler Impact Hub. If you go to this particular link, it takes you directly to the Impact Metrics tool, which is on that hub. And there's also an email address here, impactmetrics@gogler.org. If you have questions around the tool outside of this webinar, please just pop them through to us there. Perhaps once you've had a chance to actually get to use it a little bit, you might have some questions that spring to mind. We're also very interested in your feedback. This is our first sort of version 1.0 iteration of this tool. So it may be that you think this is great, but if it did this, it would be even better, or this doesn't quite work for me, or something along those lines. We're very interested in your feedback. We want to make sure that these metrics are useful to you, and this calculator tool makes them even more accessible to you. So if it's not quite doing that job and there's small tweaks that we can make, or you've got some fantastic ideas for taking this further, please do share that feedback as well with us via impactmetrics@gogler.org. And just lastly, quickly before we turn into questions, just a couple of other links that are in this presentation, which I'll share around to everyone on the webinar, of some other resources that might be of interest. There is, as well as the impact metric side of things, to try and standardize the way the impact measurement and reporting is approached. We have an initiative at Gogler working with the IFC and CGAP to try to make performance and operational indicators a little more streamlined from the financial side, KPI side of things, and that's through an initiative called PayGo Perform. We also have more resources for companies that are looking into financing, so Off-Grid Solar Investment Academy, tons of resources on there in terms of information that might be interesting for organizations looking to get investment or improve investment. The Gogler Bridge has information around where companies can get details of grant finances or RBF schemes or business development support that is available for the off-grid solar sector. So do take a look if that might be of use. The Gogler Sales and Impact Data reports, which Nabila mentioned at the start, Gogler puts out every 6 months through the link right at the bottom. And then we just launched the Consumer Protection Code, which is 6 principles that we're encouraging all companies and investors to sign up to make sure that this sector is very focused on providing best service for consumers. So please do check out those resources as well as the impact tool. So without further ado, I'll just pause for any questions and check out whether there's any in the chat at the moment. There's nothing that's coming up, so I'll wait for a second in case there are some questions, but it could be that everything was incredibly clear, which is one nice way to perhaps look at a lack of questions if there's nothing coming through. But let me pause just for a second in case there are some questions. If we don't have any that come through in the next minute or two, again, just to mention that impactmetrics@gogler.org is the place to send queries once you do have any and once you've started using this tool. And again, as I mentioned, please, any feedback that you've got once using it. We do hope to have version 2.0 probably the beginning of next year, once we've done another revision and review of the metrics with some new data, exciting data that's coming up across the course of this year. And we're hoping that once we've really sort of pinned down this tool through this iterative process of looking at this version 1.0 and getting feedback and input on it, that we'd then launch this online, which would hopefully mean that we don't then have Excel tools that are slightly out of sync with other Excel tools, and hopefully make it even more interactive and intuitive than it already is. So that's the ambition, is to have an online functional web work calculator sometime at the beginning of 2020. So absolutely, your feedback and thoughts are all very, very welcome on how we can make sure that the next iteration of this is even more useful and usable than the current tool. I don't see any questions coming through the chat, so I'm hoping that is because everything was relatively clear. So I'll just leave the webinar here, other than to thank very much Nabila and Roland for joining in the presentation, particularly as well to Roland for his work independently in terms of getting the calculator tool up and running, as well as the work of the Impact Working Group in supporting that process. And thank you all for joining and taking interest in the impact metrics. Hopefully get to engage with you across the next few months as you begin to use the tool a wee bit more. Thanks again, and have a wonderful rest of the day.